Today let's take up the very basic rules of debit and credit in accountancy. Now before we get on to the rules, first of all let's see this. For every transaction there is a debit and a credit, and we are following the concept of double entry bookkeeping here. So every transaction has two effects that we have already seen in the accounting equations video. Now first of all, let's try to understand what is a debit and what is a credit. Whatever account you make, it has got two sides, right? So I'll just show you a format of an account basically here. This here, and here this is a ledger account which we make, right? This is the date column, particulars, and you have a journal folio here and amount. I'll put a thick line here, double line, and after that again the date column, particulars, like this, right? Now here okay, now see, this is date, particulars, journal folio, and then amount, and same way here you have date, particulars, and amount. Now there are two sides in this. This side is called the debit side, and here this is the credit side, right? So for every account there will be two sides, a debit and a credit. So basically this account, whatever it be, whether it is a cash account, bank account, asset account, whatever account it be, it is divided into two identical halves here. This is the first half on this side, left hand side, and the right hand side the same columns are repeated, right? Now let's try to understand what is a debit and what is a credit before going to the rules. Debit is basically the debit side refers to the left hand side of an account, and in short we write it as debit is written in short as DR, like this, right? Whatever item you put on the debit side of an account is said to be debited to the account. Is said to be debited to the account. And if there is a balance on this debit side, we call it as a debit balance, right? Same way for credit. One more thing in debit here. Normally, whatever you put on the debit side, it means that money has gone out of the company's hand. Money has been paid, right? So whatever money has been paid, that is put on the debit side. Like if we make a payment for some purchases or payment for salary, wages, all these things, they are all payments, so they will normally be put on the debit side only, right? Now let's see what is credit. Credit refers to the right hand side of the account, right? And the short form for credit is CR, right? And when we put an item on the credit side of an account, it is said that the account is credited, right? And if there is a balance on the credit side, then the account is said to have a credit balance. And whatever items you put on the credit side is normally what you receive. Like if you receive cash from a debtor is a person who has to pay you money, right? Or you get money for some sales that has been made by you, right? That is some outstanding amount has come in, or you receive a commission, or receiving some kind of salary or something like that. All these things will come on the credit side, right? So now I have shown you this format of an account, right? And the basic thing about debit and credit, like what is a debit, what is a credit, and all the transactions will have a debit and a credit, right? Okay, now let's come to the rules of debit and credit. First of all, I'll take the traditional classification of accounts. Now, in this traditional classification of accounts, we have got three kinds of accounts here: personal, nominal, and real accounts, right? We have got rules for all these three accounts. So first of all, let's try to understand what are these personal accounts. Now, when I say personal accounts are accounts that are related to an individual, right? A firm or a company, debtors, creditors, right? And capital account is also treated as a personal account, because that capital account is the account of the proprietor, right? Drawings account is also taken as a personal account. Okay, now here you see the account of any individual. Like I have purchased some goods from let's say Amit and company, Sunil and company, or I have paid money to let's say a person, the name of the person is given. So all those are personal accounts, right? Capital account, drawings account again are personal accounts because they relate to the proprietor, right? Now the rule for this personal account, which is important here, the rule for personal account, the debit and credit rule for the personal account is debit the receiver and credit the giver, right? So the person who is receiving something is debited and the person who is giving something is credited, right? Okay, now the next one is a real account. Now real account, basically these real accounts relate to tangible or intangible assets of the firm. Debtors are excluded from this real account, though they are also assets, but they are excluded here, right? When I say tangible assets and intangible assets, tangible assets means those assets which can be seen, which can be physically, I mean you can touch those things, you can feel those assets, right? Okay, like furniture, equipment, land, building, all these things. When we talk of intangible assets are those which cannot be felt, you can't touch them, they don't exist physically, like goodwill, copyright, patents, all these are intangible assets, right? So I'll put down something like tangible assets example here: land, building, furniture, equipments, plant and machinery, right? Here you will have this stock also, stock of goods, right? Cash in hand, cash account, that is also a real account, right? Intangible assets, the examples we can take it as goodwill, patents, copyright, trademark, all these things. These are all intangible assets, right? The rule for real account is debit what comes in and credit what goes out. So whatever asset is coming in, that is debited, and whatever asset goes out, that is credited, right? The last classification is nominal accounts. Now nominal accounts basically relate to expenses, losses, incomes and gains, profit, right? So example of these accounts are like salary account, purchases account, right, sales account, commission paid account, commission receive account, right, wages account, all these things, right, and something like loss on sale of machinery or these things, right. Now we'll look at the rule for this. The rule for nominal account, I'll put here. The rule for nominal account is debit all expenses and losses and credit all gains and incomes. Fine. This is the rule. So whatever is the loss or expense, that is debited. Whatever is the gains and incomes, that will be credited. Now, these are the rules as per the traditional classification of accounts. There is one modern classification also, which I'll take up in the next session. Before that, we'll also try to identify the types of accounts. So in the next session, we'll take up different accounts and try to identify them as real account, nominal account, and personal accounts. And then get on with the modern classification of accounts. So with that, I come to the end of this session on rules of debit and credit. Bye.